All right, let's dive deep into this euro dollar thing. Specifically, um, why the euro is acting all tough, even with all this, all this craziness happening over in France. We've got this analysis from Pound Sterling Live called Eurodollar at Inflection Point.
Yeah.
Pretty fascinating. The main thing is the euro is holding strong, even with all this negative news coming out of France.
Yeah, it is. It's definitely interesting to see all this talk about the French government maybe collapsing, but the euro is still, like you said, trading above that November low of 1.03330.
Like you'd think with all that uncertainty,
Yeah.
the euro would be like tanking,
Yeah.
right? One of the experts they quote in the article, W. Brad Bechtel, he's the global head of FX at Jefferies LLC. He said the negativity priced into the euro right now is it's extreme.
Yeah, and he makes a really good point. Even with all that, like you said, the euro hasn't plummeted to 1.0000. So what's going on? Well, maybe the market is like overreacting to the negative news. Maybe they're underestimating how a caretaker government could keep things running smoothly.
That makes sense. So let's break this whole French political thing down. We've got this no confidence vote coming up. It could totally take down Prime Minister Barnier's government. And then we could be looking at a caretaker government until the elections in July 2025. So how does all that impact the euro?
Well, Tara Mar, an analyst from HSBC, he thinks the markets are staying pretty calm because, like we said, a caretaker government could keep things moving, just delay those really tough decisions for now.
So basically kicking the can down the road. But could that actually end up hurting the euro, in the long run? Like maybe they can't address any economic challenges.
For sure. That's definitely a possibility. And Mar actually points out that the EU Commission's reaction to this whole situation is really important. They could be worried about a caretaker government being able to handle France's money right, and how they react could really shake things up in the currency market.
Okay, so we've got this political drama. But the article also looks at some technical analysis.
Right. Tenmei Purohit. He's a technical analyst from Societe Generale. He thinks the euro might actually bounce back. He's looking at the mass ED indicator. The thing that uses moving averages too? Spot buy and sell signals. Well, right now, it's saying the euro's downward trend might be shifting.
So not a clear buy signal, but maybe more like a flashing yellow light.
Exactly. Purohit says there are a few key levels to watch. First, 1.0610 to 1.0635. If the euro breaks above that, it could really bounce back. But if it drops below the recent low of 1.0330, that could mean further decline.
So it's kind of a make or break moment for the euro?
Yeah, it really is. Purohit even pointed out a couple potential support levels if things go south. 1.0000 and then a really important zone, around 1.00070 to 1.00000.
So we've talked about the French political scene
Yeah.
and what the charts are saying. Are there any other things that could affect how the euro does?
Well, the article says if we see some bad economic data coming from the U.S., that could actually help the euro. Remember, currencies are all about relative strength.
So you mean if the U.S. economy starts looking shaky, the euro might look better by comparison.
Right.
And there's a big event coming up that we need to watch.
The U.S. jobs report. It could really change things, one way or the other.
Okay, so we've got this French political situation, the technical signals from Purohit. It's kind of a lot. But it sounds like a weaker U.S. economy could actually be good for the euro.
Yeah, that's right. It might seem kind of weird. But currencies, it's all relative, If the U.S. economy starts to struggle, the dollar could weaken. And then the euro. It starts to look more attractive to investors.
Even if the Eurozone itself isn't doing great, it could still benefit from a bad U.S. economy.
Exactly. Perception is everything. It's all about relative performance. And that's why this U.S. jobs report is so important. It really tells us about the health of the U.S. economy. If the numbers aren't good, it could send the dollar down and give the euro a boost.
It's crazy how all this stuff is connected. French politics, U.S. jobs reports,
Yeah.
and the euro-dollar exchange rate.
Right. Currency markets are so dynamic, they're constantly reacting to global events, economic indicators. It's fascinating.
So if our listeners trying to figure this all out, this whole euro-dollar dance, what's the main takeaway?
I think the big thing is we're at a really important point. There are good arguments for both, a euro bounce and further decline. You've got the political uncertainty in France, and then these potential economic surprises in the U.S.
We're standing at a crossroads, and we don't know which way the euro will go.
Yeah. And that's what makes currency trading so challenging,
Right.
but also potentially rewarding. You have to weigh all these factors, the risks, and make smart decisions based on the best information you have.
Makes sense.
Yeah.
So beyond what we've talked about, are there any other things, any other global factors that could throw a wrench into the euro's trajectory?
Well, There are always things that can happen, things you don't expect. Global trade tensions, geopolitical risks, even central banks changing policies, all that can affect the euro-dollar exchange rate.
So it's all about staying informed and understanding how everything fits together.
Exactly. The more you understand about global events,
Yeah.
economic forces, the better you'll be able to navigate the currency markets. And hopefully, this deep dive has given you a good place to start.
It definitely has. It's a good reminder that in the currency markets, things are rarely clear-cut.
You got it. There's always more to the story.
Well, thanks for joining us on this deep dive into the euro-dollar exchange rate. Hopefully you've learned some valuable insights.
It's been great sharing these ideas with you.
And remember, stay curious, keep learning, and maybe we'll see you on our next deep dive.
So it sounds like you're saying even with all this analysis predicting the future of the euro-dollar exchange rate is like still kind of a guessing game.
Yeah, kind of. I mean, there's just so many things that could happen that it's impossible to know for sure, but that doesn't mean we can't make good decisions.
Right.
By understanding, like we talked about, the economics, the politics, recognizing patterns, and being really careful about risks, we can definitely improve our chances.
It's not about like seeing the future. It's more about understanding the game and being smart about it. Exactly. And that's what this whole deep dive is all about. We've looked at the important stuff that affects the euro-dollar exchange rate, those potential catalysts, even some of the technical signals.
So for our listener out there, what's the most important thing to take away as they try to navigate these currency markets?
I think the biggest thing is to stay informed, keep up with the global economic news, pay attention to what's going on politically, and don't be afraid to really dive into the technical stuff. The more you know, the better decisions you can make.
And maybe even find those hidden opportunities.
Exactly. Remember, knowledge is power, especially when it comes to currencies.
Well, on that note, we want to thank you for joining us on this deep dive into the euro-dollar exchange rate. We hope you found it helpful and interesting.
It's been great sharing these insights with you.
And remember, stay curious, keep learning, and maybe we'll see you on our next deep dive.